Hi, welcome back to Whiteboard Wednesday from Domino Letting. I'm James Callahan. Today we're going to explain why the real money in property is in holding the asset, and that is back from what we spoke about before, looking medium to long term. We'll cover a few things, the factors that are important in terms of growth in property, what a bank's looking for from you in terms of deposits, and then some trends over the years from 1970 to 2010. So firstly, the two growth factors you look at in a property are your yield and your capital growth. The yield is how much you're getting back per annum, which is how much return you get from the rent versus the cost you have on the property, and then you have the capital growth. The yield is important to make sure you're cash flow positive if that's your concern, but also to satisfy your banking covenants. But your actual growth, where you'll make money, is thinking long term and how much the property is appreciating every single year. So that's demonstrated in the two circles here. From a banking point of view, there are good buy-to-let products out there. On a typical £100,000 property, the bank would be looking for a minimum, I would say, about 25%, so £25,000 straight deposit, the rest coming from the mortgage. Probably you're looking to give yourself a bit more comfort moving towards the 30% mark, rather than having everything invested so tight. That gives you a bit of insulation in terms of interest rates in the future, but also gives you a better yield year on year. In terms of trends themselves, I suppose what I'm trying to demonstrate here is that in every single market, in each 10-year period here, there have been ups and downs, and some very severe downs, but every single period property has grown. If we look at the 1970s, we had blackouts and we had double figure inflation, but property still grew by 418%. In the 80s there was a recession, there was a stock market crash, property it grew by 162%. In the 90s, UK had to leave the ERM, there was the Barings bank crisis, property grew by 30%. And lastly in the 2000s, which is very recent to us, we've had banking runs, credit crunch, the subprime scandal, but property itself it grew by 110%. I suppose looking at that last aspect, the subprime scandal, that's a very important point when we're advising clients on sourcing property, is that if you stick to your fundamentals of schooling, employment, transport and shopping, your property will be in the right area, that it will grow year on year and give these returns. And bear in mind that we'll guarantee to find the tenant within 30 days and collect the rent every single month for you. So that's a bit about why the value in property is holding the asset. Look forward to seeing you next week. Thanks for now.